With house listings is showing how some may be unhappy with the current market. Eric Pointer has been looking into this data for us and joins us now from our 5 Alert Center, breaking it all down. So, Eric, what trends have you been seeing?
Sellers across the country are hitting the brakes, yanking their homes off the market at a staggering rate. They're refusing to accept that the housing market is cooling down, and they're clinging to sky-high prices from years past. But is this stubbornness going to stop the market from crashing? Will it keep home prices from dropping? And what's coming in the second half of 2025? Stick around because I'm breaking it all down in this video, and trust me, if you are a prospective homebuyer in the next 6 to 12 months, then you don't want to miss the important details I will be sharing in this video. Please note, this is not a financial advice. I am not a financial advisor. Please do your own research before making any financial decisions. Let's kick things off with the big headline. Seller delistings are up a whopping 47% year over year as of May 2025, according to data from Realtor.com. That means nearly half of the sellers who listed their homes are now pulling them off because they can't get the price they want. Imagine putting your house up for sale, waiting months, and then saying, "Nope, I'm out." That's exactly what's happening, and it's a huge signal that the housing market is slowing down. So, where is this happening the most? Phoenix, Tampa, and Miami are leading the pack. You can see in this map from Realtor.com, Phoenix and Miami are leading the delistings chart. For every 100 new homes listed, nearly 30 are being pulled off the market. That's quite a lot of sellers saying, "Forget it." Sellers are holding out for those peak prices from 3 or 4 years ago, but the market? It's telling a different story. Here's the deal. Home values in Phoenix have already dropped % over the past year. For example, if you see here in July 2022, the median house price in Phoenix peaked at $459,500. And since then, it has been in a steady decline year over year, with June data showing the same median price being valued at $416,700, which is roughly a 9.3% decline over 3 years. This may not sound like much because of the exorbitant price rises from 2020 to 2022. However, history shows that whenever house prices correct, it roughly takes about 6 to 7 years of decline before house price bottoms out. So, considering house prices peaked in July 2022 and assuming we are halfway through the declining cycle, we can expect even lower prices in the next couple of years, especially in the locations I mentioned. Of course, nobody has a crystal ball, and past performance is not indicative of future results. But we can expect the prices to continue to decline, at least for the next 1 year, to make them more affordable, especially in cities where the supply is high and demand is low. These include states like Phoenix, Texas, Florida, and Colorado. As these states experienced major price hikes during the pandemic boom, where more and more people were migrating to these states, as most of the white-collar workers like IT consultants, lawyers, software engineers were all working from home, and they chose a cheap alternative in these cities than the nearby cities. However, now that most of the companies are forcing them to report back to work in their original locations, they are migrating out from states like Arizona in record numbers, which could trigger further price decline due to lower housing demand. Across the U.S., we're seeing inventory pile up. As of June 2025, there are nearly 1.1 million active listings nationwide, according to Realtor.com. That's almost back to pre-pandemic levels. In the South, including states like Florida, Texas, and Phoenix, inventory is even higher than it was before 2020. More homes on the market plus lower buyer demand? That's a recipe for a soft market, falling prices, and frustrated sellers. Now, you might be wondering, why are sellers so stubborn? It's simple. Many are in denial. They're thinking, this dip isn't real. My house is worth what my neighbor sold theirs for in 2021. This happens in every market downturn, whether it's houses, stocks, or even collectibles. Sellers go through a phase where they refuse to believe prices are dropping. But here's the kicker. Denial doesn't last forever. After denial comes capitulation, where sellers finally accept reality and lower their prices. And trust me, that moment is coming. Let's zoom in on Florida for a second. Some data based on price projections at Reventure app predicts home prices here could drop 6.2% statewide over the next 12 months. In some areas, we're talking a 10% plunge. So if you're a seller pulling your home off the market now, hoping to get a better price next year, you might be taking a risky bet. The market is shifting, and waiting could mean selling for even less down the road. But here's where it gets really interesting. Not all sellers have to sell. Some are just testing the waters, listing their homes to see if they can score a big payday. If they don't get their dream price, they're fine pulling the listing and waiting, sometimes for years. Why? Because a lot of homeowners are sitting on super cheap mortgage rates. About 22% of mortgage holders in the US have rates below 3%. For example, in Mesa, Arizona area, which is not far away from Phoenix area, this house was bought in 2018 for roughly $350,000 and listed for sale at $699,900 in April 2024. This house has been sitting in the market for 470 days, and after multiple price cuts, and even removing it from the market at one time in March 2025, the current price the seller has listed now at $599,000. That's a price cut of more than $100,000, or a 14% cut from what it was originally listed for. And to be frank, we are not even sure if with the current price the house will be sold. If you go for high-end market, see this house for example. It was bought in 2019 for $858,000 and then listed for sale in January of this year for almost $1,700,000. And it shows that the house has been sitting for 80 plus days, but the reality is the house was yanked off from active listings in February and then later added again in April. And if you see the description, the seller is offering a concession of $50,000 towards a 0.75% interest rate buydown if offered a full price. And in addition, the owner must also pay all the closing costs that come out to be around 8% of the purchase price. So that would mean if the seller is lucky enough to secure a deal at the full price of the house, he will still be paying almost $200,000 out of pocket. But that is only if the seller gets the full price of the house, but with the current market conditions, that seems highly unlikely. Another important point to note is that right now, about 20% of mortgage holders have rates at 6% or higher, and that number is growing. Every year, around 4 million existing homes and 600,000 new builds are sold, often with higher mortgage rates. So the lock-in effect of low-rate mortgages is fading. People who bought in the last few years at 6% or 7% rates, hoping to refinance later, are now stuck. Rates haven't dropped, and that's putting pressure on the market. So what this means for buyers? If you're house hunting, you might see listings priced way too high. Don't get discouraged. Sellers might be asking for 2021 prices, but that doesn't mean they're getting them. Remember, across the US, there are 500,000 more sellers than buyers currently, so you have more options to negotiate. And in areas like Phoenix, there are twice the number of sellers than buyers. So the wise thing would be to make an offer that makes sense for you. If buyers don't make offers, sellers stay clueless. So if you're serious about buying in the next 3 to 6 months, do your homework. Figure out what a home is really worth and make a fair offer backed by data. You'd be surprised. Some sellers might just say yes. Remember, every house has a number unless you offer that. Now let's talk about foreclosures, because this is a big piece of the puzzle that may drive prices even down further. Right now, foreclosure rates across the US are still low, partly because the government has been holding back foreclosures, especially on FHA loans. But that's about to change. By September 2025, we could see a wave of foreclosures hit the market as that backlog gets released. Back in 2009 to 2010, some Florida markets saw foreclosure rates as high as 12%, 1 in 10 homes. We're not expecting that level of chaos this time, but even a small uptick in foreclosures could push prices down further, especially in places like Florida, Georgia, North Carolina, Phoenix, and Tennessee, where values are already dropping. So, what's the big takeaway? The housing market is at a turning point. Sellers are pulling back, inventory is piling up, and prices are starting to slide. But this isn't a crash, it's a slow burn. Housing downturns take time because selling a home is emotional. People get attached to their homes and the price they think it's worth. It might take years for some sellers to face reality and cut their prices. But for buyers, this could be your moment. Don't be afraid to make offers, even if listings seem overpriced. And if you're a seller, think hard about whether waiting is the right move. Prices might not be heading up anytime soon. Thanks for watching, everyone. If you found this video helpful, give it a thumbs up, hit that subscribe button, and ring the bell so you don't miss our next deep dive into the housing market. Let me know your thoughts in the comments. Are you seeing these trends in your area? And as always, stay smart out there, and I'll see you in the next one.